Hello and welcome to the day ahead. It is Thursday, March the 20th. I'm Andrew Gagan. Well, the local market is set for a strong opening with ASX futures up around 0.2%. This as the US Federal Reserve left rates on hold in the 4.25% to 4.5% range, but indicated that interest rates would fall by another 50 basis points by the end of the year. However, Fed Chair Jerome Powell says the Trump administration's policies present an economic outlook where uncertainty is unusually elevated.
While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves.
Given the widespread imposition of tariffs, the Fed has marked up its outlook for inflation this year to 2.7% compared with 2.5% pace anticipated in December.
It is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it, a good part of it is coming from tariffs. But
Fed officials marked down their forecast for growth this year, with Jerome Powell adding that the odds of a recession have increased but are not high. Following his comments, US interest rate futures priced in a cut of just over 0.5 percentage point this year, in line with the Fed's median projections, with traders seeing a 62% chance of a cut at the Fed's June meeting. US Treasury yields fell in response to the Fed's outlook, with the yield on the 10-year note down 2.9 basis points to 4.25%. And the 2-year down almost 6 basis points at 3.98%. The US dollar paired gains against the euro after the Fed held rates steady, and the Aussie is trading at 63.6 US cents. The Bitcoin climbing to 85,500 US dollars. Well, US stocks have rallied after the Fed kept rates unchanged, as widely expected. Stocks extended gains further as Fed Chair Jerome Powell spoke, saying it's difficult to assess how much of any price increases are attributable to tariffs. The big banks rose, along with the Mag 7. And Tesla was one of the biggest gainers, while the volatility index fell below the 20 level for the first time in almost a month. And Boeing shares soared after the aircraft maker said it does not see a near-term impact from tariffs. Oil prices edged higher after the US government data saw a drawdown in fuel inventories, but the Fed's decision to hold rates steady capped gains. Brent crude futures just shy of $71 a barrel, copper's up 2%, iron ore falling 1.7% to $100 a tonne, and gold has jumped to another all-time high, with spot gold up half a percent to $3,047 an ounce off the back of the Fed decision, and after Russia and Ukraine accused each other of violating a new agreement to refrain from attacks on energy targets. Locally today, we get labour force data for February, and on the corporate front, we can expect earnings reports from Brickworks, Sigma, Healthcare and Washington Soul Patts. Among those stocks trading ex-dividend are A2 Milk, Cochlear, Kelsian Group and Service Stream. That is your day ahead. See you again tomorrow.